why is North American real estate such a great market?
Yes, in North America, there are numerous benefits for real estate investors and to grow their portfolio and get tax benefits as well. That
Right.
is another huge benefit because in Europe, I hear, especially in England, they don't have this capital gain exemption. But here in Canada, when you have when you have a primary residence,
Hmm.
you don't pay any tax at all from the capital gain. That's an amazing thing.
Right.
Because people whoever bought a property in GTA probably like 10, 12 years ago, they would have made $1 million on their property. Now they don't need to pay a single penny to the government, whatever the money they will be making out of that. Imagine who can save $1 million by working for somebody else through bi-weekly paycheck, right?
Hmm.
So therefore, that is one benefit. The secondary benefit, if you have investment properties, even for those investors also, government give them incentive that all the expenses can be written off. At the same time, interest on borrowing can be you
Right.
can write off as well. And at the end of the project completion, let's say if you're selling an investment property, then you only pay 50% of the um, so you will pay tax based on 50% of the net profit you'll be making.
Hmm.
So let's say for an example, if you make $1 million as capital gain, you don't pay tax on $1 million
Hmm.
on your investment.
Hmm.
You only pay tax on 50% of the 1 million. That
Hmm.
would be half a million
Hmm.
dollars. So that's amazing. Another 50% of the profit, you don't pay a penny to the government. And the other benefits are because you can get mortgage with 20% down here. Let's say if you own primary residence and then the secondary one as your investment property.
Hmm.
So on the investment properties in here in Canada, you have to come up with 20% down payment. So if you have a 20% down payment and decent credit and income, you can get a mortgage. At the same time, from the existing rental property, you can add that as your annual income,
Right.
and then that will give you more capability of purchasing property. So
More
it gives
leverage.
you, yeah, purchasing power.
Hmm.
Yeah, there are several benefits you
Hmm.
could benefit. Yeah.
You've mentioned that in the past that like once you buy your secondary home, then you automatically have more leverage to go ahead and try to buy your third property, and then at a certain point you're going to leverage out, and the banks are not going to lend you any more money. Could you talk about that a little bit more, maybe?
Yes, and let's say for an example, if you own a property and live there for 3, 4 years, then your property would have already appreciated, and then you would have paid down on the mortgage as well. Now you could go back to the bank and refinance it, and then leaving 10 or 20% as let's say loan to value could be around 80 or 90%,
Hmm.
and then the rest of the funds, whatever appreciated, you could get that out as a line of credit
Hmm.
or as a mortgage.
Hmm.
So this how you could get this additional funds and then put that as a down payment for your next project
Hmm.
and purchase it, and then you can do that for a couple more properties. After you own 4 to 5 properties, only banks then look at you as you have over leveraged your credit, and they will stop lending you, and then you will run into problem going into private lenders or other mid corporations to finance your projects.
Right. Right. Have you ever ran into a situation where you had to do that yourself?
Yeah, like after owning several properties, and I got capped, and bank said we won't be able to lend you anymore. At the time, I was still working as an engineer,
Hmm.
and then for one of our purchase, I had to borrow from MIC Corporation, Mortgage Investment Corporation. Unfortunately, their interest rate was high. Like they started with 6.5, and then each year they were increasing by 1%. After 3 years, it came up close to 10%, and then I said we are going to end up paying all the rental income, and also we have to additionally support the payment by pumping in more money every year. And after 3-4 years, I have decided to sell the property, and we made $250,000 in net profit. It turned out to be we didn't make any penny because we were supporting this high interest rate mortgage,
Mhm.
and that was eating away all our profits.
Okay.
So that's why the investors, they need to be careful when they, it's not as a matter of just acquiring a property. You have to do the math and make sure your property is cash flowing and your expenses low.
Mhm.
But if your expenses going to be higher than the income you'll be making, then you have to run around and produce income to support that property. Then that's not an investment property.